Mate, we've had some DMs with some big influencers asking us about LPX. A lot of community members are asking us about LPX. So yeah, it's gonna be good. Going to be good. And LPX, so that's the reason why we're here. LPX, single-sided staking, turning you into a market maker and earning great yields. What more could you ask for?
Yeah, I don't think most people even know what a market makers are in traditional markets. Maybe we ought to spend some time on talking about what a market maker's job is. But it's, the one video I threw out there that one time was, kind of like a currency exchange inside of an airport when you travel to a foreign country and you want to swap your money out. They're there to make sure that you can go from one transaction to the other. So if you wanted to swap out I don't know, your euros and you wanted to turn them into yen, there's a booth you can go to, and boom, there's a guy ready with money waiting to make trades. And that's kind of what an automated market maker is. We're going to throw our tokens inside of this kind of a kiosk, this LPX little program, and it's waiting for action. And it's like when it sees a possibility, like, hey, this guy over here is looking to make a trade, and I like what he's saying. Your funds go over there. Your funds will run over there, and they make a transaction. And that's the big difference with an automated market maker. Your money's not sitting out there for somebody to come and grab. You're actually looking at the blockchain. Your smart contracts looking at the blockchain out there, and it's like, hey, there's an opportunity over there in that liquidity pool to go make some money. And it takes your money and it goes over there and it does it for you. It's so that's one of the big things I think people need to understand about LPX is your money's not, quote, at risk. Your money's looking for opportunities. And when I say money, I'm talking about your tokens. So it's your UP tokens, your UPX tokens, your Solid X, your Inc, your Pulse X, your whatever the hell token you want. It's looking for an opportunity to go out there and make a profit for you. That's an LPX.
Yes, sir. So with LPX, you single side stake your tokens. You just go in, you grab your Pulse X, your UpX, your your Inc, your Most Wanted, whatever tokens you have. Put them single sided, and then in the beginning, it's going to be a group. Just to go back one step, in the beginning, there's going to be selected pools that will only be allowed to use LPX, and then we're going to expand from there. But all you do is put your tokens in, and then as the price goes up, it will sell a little bit of it into whatever the other side is. So let's keep a simple die. Price keeps going up, it sells into die, it stacks those die, and then when the market turns, it will use that die to rebuy back up. So imagine you've got an LP pool that's hidden in the black market. You've got a liquidity pool. It's going to be arbitraging that pool to the market pool that are on all the dexes. So it'll be looking for the best value to trade in, and as the price goes up, it'll go, okay, well, now I can execute another trade. I am in the sell zone, and then it'll just sell some tokens and stack more die, and it'll keep doing this. And there's only one arbitrage bot that works with your LP, which is the market maker bot for LPX. So no other arbitrage bot can arbitrage into your pool. You have one arbitrage bot that's going to be arbitraging into other pools, giving you the profit. And that's why LPX works so great. So you have these buys and sells, you'll have a gap in between, a no trade zone. You have control of this no trade zone. You can put it at 3%, 10%, 5%, 15%. The choice is yours. And then every time the price reaches outside of the no trade zone, it will do a trade. And we're looking at like a 30% APR, and I keep saying that, hey, even if it was 10% APR, you're not making yield on your PulseX right now. It's sitting there doing nothing. And now you can use LPX with your PulseX. So you grab your PulseX and you use a LPX, and bang, you start making yield. And the more volatile it is, the more more API you make.
Yeah, and one of the pairs we have is the Pulsex pair, and we've watched the volatility between that ratio. Pulsex almost goes to peg, then it goes back away, and it goes almost back to peg, and it goes back away. Those two tokens, the volatility is where you're making your money in your LPX. So let's say you throw a bunch of Pulse into the Pulsex LPX, and so what happens is let's say that all of a sudden the ratio gets really really good for in your favor, and it's like, shoot, man, I can dump a little bit of Pulse and I'll get a whole bunch of Pulse X. So it's like, okay, then it does that, and then the ratio swings the other way, and it's like, hey man, I can go get rid of this Pulse X and I can get back more Pulse. So I'm going to be able to, and that's what it does. It just goes in and out of that pair, and that pair's got volatility all the damn time because of the other people buying and selling and doing whatever they're doing on the market. So it doesn't work off of volume; it works off volatility. So as that pair ratio starts moving back and forth, the LPX goes make small trades in and out, in and out, in and out, and it just keeps stacking more value for you as a trader. And it's helping the ecosystem because it's balancing out pools. We're not necessarily extracting value like some of the ARB bots you hear that are nefarious out there, just trying to grab value from the community and take it off and run off to another chain. We're actually building more value within the chain because we got true holders in here that have big stacks of Pulse and PulseX, and they want to just get more, and that's what LPX is going to allow them to do. So it helps the chain, it doesn't hurt the chain, and it gives people a yield, a single-sided yield. You don't have to have both Pulse and PulseX. You can just have one. You got a big bag of PulseX, put it in LPX, and let that damn thing grow for you.
And guys, please like the spaces and retweet so we can get enough people in here. This is very important information. We're building this for everyone. Yes, Up and UpX do benefit on people using LPX, but in all honesty, LPX alone, without that, is an amazing tool to use on Pulsechain. So please retweet the room and let's get people to listen to what LPX is. And
Yeah,
I keep it in a nutshell. LPX is a single-sided staking liquidity, which makes you a market maker, which will make you sell high, buy low, and what we call that a no trade zone. And the more you sell high and buy low, the more yield you make while supporting the price.
yeah. A key feature of the mechanism is this. The stair-stepping ladder, it cannot have cascading sales. That's one of the things you hear about, different bots that are out there, these trading bots, is you could start ending up with a token you don't really want because you get these cascading sales where your automated market maker sells, then the price drops on your token, it sells more. Your price drops on your token, it sells more. LPX doesn't do that. The only way you can get two sells in a row, the price of your token has to go higher. It'll sell, thinking it's selling at a high, and it's like, oh shit, the price went up a little bit. It'll sell a little bit more. Oh shit, the price went up again. Sell a little bit more. Then when you have the pullback, now it's got all this added value to buy back in and support the price even higher. So it's got this value that's built in your LPX, and it keeps pushing the floor price of your token higher. So not only are you getting a yield, but your LPX is pushing the price of your token higher and higher because it's stacking up the secondary token to buy on the first dip it sees.
Yes, sir. So what we've noticed with LPX is the impermanent loss is mitigated because of the no trade zone. And the more volatility there is, you might actually be in an impermanent gain. If there is another word for that, let me know. Because something like generally, I've never heard of people being in impermanent gain. And the yield is in the actual token you're in, the token you love, the token A. You're gaining more tokens. So if the price went up, let's say the price did a 2x and came back down, and it had a few volatile, it was a bit volatile in between. So it went up 100%, came back down 50. It's back to the same price where it was. You'll actually have some stable coins left over, and you'll have your tokens back eventually. Like it's very close to that ratio. It's a little bit lower, but you'll actually have more than you started with. If the prices keeps going down, you're gonna have you stack up way more of token A. Token A was up or up X. You end up having more up or up X. If it's Pulse X, Solid X. There's plenty of tokens out there. There's pump tires. There's all these tokens that were launched on pump tires. The pump token, most wanted. You can go use this and become a market maker. And some of these, like you want to support the product. So what you are supporting it by using LPX. And as the price goes up, you're selling off a little bit to buy those dips, to buy those people who dump, and support the price. So the price doesn't dump as hard, and then people have more confidence in buying this token. And they're gonna look at the chart and say, well, this thing doesn't go down as hard as the rest because it's got a really strong LPX pool behind it. And then as the price keeps going up, people start buying it again, and then people love buying green candles. It starts going higher. You start selling off more, and then eventually someone will be like, "Wow, I'm in a lot of profits," and they're gonna hit the market sell, and LPX kicks in again. Like the once you pass the no trade zone, you're in profits again. You're making profits because it skipped that 5%, 3%, 10%, whatever no trade zone you have, and that is unique because in a normal traditional LP, you are the market. People are buying off you, where you are selling into and buying into the market. So and that's um, the key feature of what makes us different.
Yeah, and if you want to see one in action, go to plusx.app, and there's a LPX tab in there, and you click on that, and there's one of the main LPXs we're currently running on mainnet is there for you to look at, and you can watch the transactions of it going in and out of trades. So there's evidence it works. We see it in our chart. We see the yield that we're getting out of it, and we're trying to bring that to all of Pulsechain for every token on the chain.
Yes, sir. LPX is gonna save Pulsechain. Let's make Pulsechain great again. Let's try to use these tools that are built to help support Pulsechain. We've already built Validator X, which is, you become a validator by liquid staking. So you put your pulse in, you mint your UPLS, and you become a validator, and you're earning yield on your pulse. And now we're bringing LPX to the community for people to use, and hopefully the future will start looking great. And I've always said that LPX, because LPX, when's the best time to start an LPX pool? In my opinion, is when the price is low to start an LPX pool. I know Pulse and a lot of tokens have copped a big hit recently, and to have LPX starting within the next 7 days is probably a good thing because we're at such low prices. So if we get a lot of people using LPX for Pulsex, and all these main tokens, and as the price rises and they're stacking some stable coins, or they're stacking some, whether it was Pulse to Pulsex or Pulse to any other token, as the price drops, we start buying it up, and we're going to start having better looking charts across the whole Pulsechain ecosystem. And the more core tokens we use LPX in, the whole of Pulsechain looks better. And then it'll bring more confidence in people to come in and buy, the main cores of Pulsechain. And if anyone that bridges over and buys, if they buy the most token, it's going to route through the Pulse pool. So the price of Pulse will go up. And that's what we want to see. We want to bring in confidence. We want to bring confidence to the people who are outside of Pulsechain, or the people who have exited, to say, hey, charts are looking good, things are looking strong. Let's bring our money back, or let's bring our money in and start buying Pulse. My confidence is back in Pulsechain.
Yeah, yeah, you were talking about that confidence. I mean, look at the price charts for Up and Up X, right? Because we got LPX running to protect our charts. I go in there and I look at this like, wow, man, look at it. Nobody likes buying tops, right? And you look at that, it's like, shit, I'm not going to buy that token. It's had a run. Look, it's waiting for a pullback. But I know how much value is sitting in LPX waiting to protect that floor price. That's what LPX does. When you get enough people, kind of a cabal kind of thing, like, hey, we're all going to put our money together and we're going to set this floor price. And if some dolphin or some shark wants to come in there and try to dump our chart, we'll just eat them up. And that's what an LPX does. It stacks this secondary token on the way up, and our LPX has stacked an awful lot of value ready to protect our price. So LPX builds a floor for every token on Pulsechain. And if we can do that, we get enough participation with LPX for SolidX, Inc., Pulse, PulseX, all of those tokens we love on Pulsechain. If you get your community behind an LPX, it can absolutely just ratchet your token price higher. And dolphins and whales, not whales, whales can always have an impact. They can splash around, but dolphins and sharks will have no impact on your price chart. Your LPXs will just eat those guys up, spit them out, and that builds a psychological confidence within your token to where, like, you know what? I got a DCA a little bit more. I don't care where the price is. I'm going in because I know the floor is protected.
Yes, sir. If anyone has any questions, please put it in the comments below, or they can put their hand up and I'll give them the mic for questions, because the more questions we get, the better. So that way we can, in the future, explain LPX better. So LPX is really close, and I'm using this time to try to improve myself explaining LPX. So please ask questions, don't be shy. This is going to be great for Pulsechain, so I want to get this right, and I want to be able to explain it in simple terms of what it does, so more people can use it. Anyone? Come on, somebody. There we go. We got a request. Woo-hoo. Top Gun, how are you, my friend? Let him connect. Hey, buddy, how are you?
Hey, thanks for having me up here. It's been a while, mate. Good to see you around the system and still building.
Wow, shit, that's
Still
Top Gun.
going.
Holy hell. I recognize that voice.
Yeah, I still live.
How are you, my friend?
Well, Pat the Paul Squirrel had babies, so it's been chaos. But the LP token here, LPX, this has got me a little more excited. No offense with UpX and Up, or this was the imaginary horrible of 2 years of Pulse not going up. But the LP providing, that does generate a steady fee income. That is quite regular. So I walked into the space a little late. I've got questions like, is this going to be a V2 pair in PulseX, or are you going to do V3 side? How are you going to funnel the fees back
Wait.
in?
Hold on.
Like
Hey,
maybe a quick
Top
overview?
Gun. Did Haunted pay you to show up and ask this question? Because this is
Hell no.
you're throwing him a
Hell no.
softball.
This is just
You
fate,
are
man. I just
throwing
showed up.
him a softball right now. Go ahead, Haunted. Have fun, babe.
Oh, mate, LPX is its own liquidity in the dark pool. So you are the LP. You are like this hidden LP. It's not V2 and it's not V3. You have your single side stake your liquidity, and then you have your own arbitrage bot that would arbitrage in the V2 or V3 pools on Pulsechain. So no one's trading into you. You are trading into everyone else. So
Oh,
as the
so this
price
is
goes,
buying a share of arbitrage bot system then, eh?
You're setting up
it's
your
not
own
buying.
arbitrage bot. It's setting up your
You're
own.
setting up your own, yeah. There's no token here. LPX is not a token. LPX is a tool that you can use any of your tokens that are sitting in your wallet to create a yield for yourself. This is not a token, to make this clear. We're not. There's no sacrifice. There's no nothing. Come and use LPX with any token that you have in your wallet.
Oh, my bad. I was actually imagining, because the way you tried to have Up and I think UpX or whatever, the way you had to reinforce system with those, I was like, well, LP fees, those do generate quite consistently. I thought you were using that to up a token. So, no, that's really, really cool. So you guys are just making a front end right now for building your own RBot. So yeah, lay it on me nice and simple. I just walked in late. So yeah, I'll be quiet and listen.
All right, so I'll try to keep it simple, because it like, this is how I keep it simple in my head. I know my head is a bit complicated. LPX is a single-sided staking pool that uses your funds, so uses your tokens, and turns you into a market maker. As the price goes up, it will sell some of those tokens into DAI or whatever other side you want to be. And then when the price comes back down, it will rebuy the token A. So let's just keep up as an example. Price of up goes up to the secondary token. So it really is ratios.
Oh, we lost Haunted.
Up into.
Oh no, yeah, start over, Haunted, because
Am I back?
yeah, you're back. Start over
We
when
caught up to
yeah,
ratios, and then it cut
token
out.
token
Yeah.
A,
Okay.
token B. Yeah, you have to have a secondary token. So your secondary token or your anchor token is a ratio token. But go ahead, Haunted.
Yeah. So take the starts going up in value, and let's keep DAI as the other side. It starts selling some up into DAI. And then when the price comes back down, we have something called a no trade zone, like an order book, right? So an order book has a gap. Nothing happens in between these prices until it goes under the no trade zone. Then it starts using that DAI to rebuy the up tokens. So you're selling these up tokens at $1, $1, $2, $3, $4, as an example. And then when the price comes back down, let's say the last sell was at $1.04. It needs to wait for just to keep something, keep it simple. It will need to wait until it hits $1.02 to rebuy your tokens. Then the price starts going down and starts using those stable coins to rebuy, at $1.02, $1.01, and then $1, then 99 cents, and then 98 cents. So that's where you're making your profits, because there is something called a no trade zone. No trades are done in between this. It could be 5%, 10%, 3%, you choose. And that's where the profit is on your token. That's where you're making a yield on your token.
Yeah. So the big picture
Oh,
here with an LPX is it's building you a yield based on volatility and not volume. You're looking for your token to go up and down, up and down, up and down, and so your bot is jumping in and out of the market as that volatility exists. And we know crypto is very volatile. The one pair we keep advertising, we have an UpX DAI pair that has a significant amount of funds in it, and that pair is trading about $7,000 a day in there at about $100 clips at a time, $100, $200 in, $102 out, and it's just stacking and stacking more more UpX for us. And so, we have gotten to the point where it's sold enough UpX to where we had like $20,000, $30,000 worth of DAI in there. And then, of course, price market comes back down, and that 30,000 is now activated, protecting the price of UpX, and it's buying that UpX back. And the yield we're getting by the time it sells the UpX and then buys it all back, the yield is about 33% on the pair that we have running for UpX, and it's stacking that yield in additional UpX. You're stacking more of your token. Plus, it's protected the shit out of our token price. And I don't know if you've looked at our charts here recently, but you might want to pull those up on your computer and see what LPX has done for our tokens.
okay. So this does sound pretty interesting here. I'm not actually aware of the protocol you referenced. Like, I'm still. This is quite interesting. Like, it's a trade bot that's working kind of like a V3 liquidity pair, almost. Like, other than the no trade zone, which is an interesting concept. But I mean, even when providing liquidity on V3, you've always got the risk, like, okay, well, it starts going down. You sell out of the token maybe you love into another token that you don't mind. And then you hit the no buy zone. But before you get back to buying back, price turns around, goes the other way. Now you're locked on this, and that's kind of an impermanent loss, right? So now you've got to get back out of your position and re-switch and kind of still anticipate how the market's going to go up and down out of these ranges, correct?
Well, see that where you're at in V3 is your capital's at risk. People could go in there, and if somebody, some like you said, some big market maker comes in there and says, you know what, I'm going to run right through your V3 range, and you're sitting in a token you may or may not have wanted. All of your capital's at risk in a V3 position. With an LPX position, your capital is not on the market. Your capital is getting injected as your RBOT, your smart contract looks around and it sees a pair, sees the liquidity pair over there on one of the dexes and say, you know what, there's an opportunity over there to go to sell at a price that's higher than what I think the market price is, and it goes over there and it'll sell your tokens. Well, then there's going to be another pair somewhere else within the dex where it's like, well, that pair over there is a little bit low, and so it just bought or it just sold at a high, and it sees another pair and it goes over and it sells at a low, and the moves are so small, in terms of percentage of capital allocation, that you don't run this risk of impermanent loss and getting thrown into another token. with the exception of if the price of your token decides to just rip, like do it, a 50x over a period of time. Well, you haven't had that volatility to where you can keep stacking the wins and losses, right? Because or the ins and outs, not wins and losses, because you want to go in the market. You're going to throw your tokens in the market and sell them, and then you go buy them back, and you throw your tokens in the market, sell them, and you buy them back. And as long as we have, traditional volatility within the market and a slow, steady climb, you have no risk of impermanent loss. In fact, the LPX that we have on our site that we advertise for people to go look at, we have 7 of them running currently on mainnet. It's been running for 127 days. The yield has been the APR on that has been about 33%, and there's 0 impermanent loss right now on that pair, on that LPX.
Yeah. So with a V3, right? You put a range, and you could be out of that range. Price goes up, you're out of that range, and the price continues, and you're losing those gains. Yeah, you exited, and you're out, but you were trying to make that yield in that range. With LPX, the upside is infinite, and the downside isn't infinite. So it will use all the capital that it's sold into to rebuy back the token. So the price can go up, a 3x, and you'll still be in range. There'll always be tokens that will sell to rebuy back the tokens. And market's always volatile; it always goes up and down, right? And as long as it keeps going up and down, you're going to see that your impermanent loss is mitigated compared to a V2. A V2, you're down. What was it? At a 2x, you're down 25% or 30. What was it? 50%? 25%, I think it is.
It's about 25%.
Yeah. So with LPX, what we've noticed is that you're not. When the very first LPX pool, we almost did a 2x, very close, and we were sitting at an impermanent gain because of the volatility from let's say the start point to the 2x, that it was actually making a profit in between. When we finally got close to that 2x, we didn't hit the 2x from the starting point. We got very close. Our impermanent loss was very minimal. It was like $1,000 from a pool that was worth 250K at the time. And that's quite impressive compared to a V2 pool. And a V3 pool, you have impermanent loss as well because the way it's structured. So to see no impermanent loss, and so at points an impermanent gain, there were points where I looked at the contract and I'm like, if I get out of my position right now and rebuy the UpX, I'm actually at a 10% gain. So there'll be times where you look at it and go, wow, I'm actually gaining right now. Maybe I'll just do that and then restart my LPX pool. I've gained 10%. Take out that stable coin, rebuy back your UpX, and then start a new LPX pool. And you could do that. You could be actively managing and make even more of a profit, or you could just leave it, set, forget, and literally just make a yield. And as the price goes up, it just keeps making a yield. That's the great thing about LPX. We're keeping it very. We could have just set a 5% no trade zone and said that's it. Keep it simple, but we're allowing people to change that no trade zone from 0.3% to as high as you like. You can go 20, 30, 40% no trade zone.
Okay, that's quite interesting. So you can start with a single-sided pair. The trade bot will generate both sides of the pair, and then it'll stretch it into infinity like a V2. And so essentially the V3 part is your no trade zone. That's the range you're setting for how long you skip to try and maximize profit. So that does need to be adjusted theoretically, manually. Also, does your system have a way to, so price for Pulse right now is trading, for example, it's 0.84 Pulse, or no, 0.84 Pulse to get a Pulse X token. So, you set well, let's just do it with the dollar amount. So, right now it's what? It's about a fifth of SAC price, 4 zeros and a 2.
Yep.
So if you're providing against, say, DAI and Pulse itself, and then you wanted to set something as insane as 100x no buy zone or something between the prices of, 2/5 of SAC price and 1/5 of SAC price. So in there's your no trade zone, but you're accumulating above and below that, assuming we get a bit of a kangaroo market below where we've had our lows. But then suddenly price shoots up. It does do a 10x. We're back over SAC price. So that no trade zone is completely irrelevant at these prices. Now, is the system going to
Yeah.
automatically
Yeah.
adjust for the
Here's
new
No, it's
prices that are being
always
held? Or I got to go in at this point and go, oh, look, my no trade zone seems to be in a new range. We're in a new kangaroo market at a whole new place.
okay. Let me help on it here real quick. So there's a black box of math. You walk into a currency exchange in a airport and you look around and it says, hey, you know what? You want to change dollars into pesos? Yeah, we're going to give you 19 pesos per dollar. And let's say the market changed because of Trump's tariffs or whatever. And so you walk into the airport the next day and all of a sudden $1, you're only going to get 16 pesos. There's no trade zone around what you have to set and leave it. What happens is the trade zone moves to whatever current market price is. So as market price adjusts, your no trade zones around that. So there's like this fair market price that this black box of math calculates. Like, hey, this is what fair market, because it looks at all the liquidity pairs. Say, okay, these are what these tokens are worth per unit basis. And so it says, okay, well, we're going to take that, and now this is the new market price. And so when we see price move, 2.5% above or below that fair market price, it will create a transaction for your LPX, because it has a new norm. It's like, okay, this is the norm now. I need to make money within this norm, because that market makers, the guy at the airport's not going to shut down his kiosk because it's not in his zone anymore. The fair market price is recognized by the LPX, and it says, okay, so now we're going to trade around this zone. And so it's got to go 2.5% above that or 2.5% below that for us to make a transaction. And it looks for pairs within the liquidity pool system and says, okay, there's a pair over there. I can go make a trade and I can make a transaction on that side over there. And so your LPX is constantly at work for you. You don't have to manually go in and adjust anything.
Okay, so I do set just a percentage. I don't set actual price points.
Correct.
And the
no.
system's doing something like using the Oracle to track a 20-point 4-hour moving average or 1-hour moving
Exactly.
average to determine where the...
Yep.
Okay.
There's a fair
Yeah,
market
so
price
your no
designed with.
trade zone, just to simplify, your no trade zone actually follows the price. So when you're in the sell zone, as the price goes up, the no trade zone also follows. So it's just following the market. And then when it comes down, it needs to go below the no trade zone, and then it starts buying again. I put some videos up in my Twitter, so if you scroll down my feed, you'll see some videos of explaining it with crayons. Sometimes simplicity always works. So
So
have a look.
I guess what I'm driving at here is, like, let's say I set a 5% no buy zone. But now the price is dropping 1% a day. My no trade zone is going to follow that and not do any trades. I need a higher volatility move at that point, but that's how quickly. Like, if it moves 5% a day but not in an hour, will my bot activate? Like, this is where now it's kind of a time element I'm trying to figure out by this range. Like, how accurately is it tracking closely with the current price? Like, how quickly
So
does the price then have to shift to activate the buy?
if it was that if we were buying, if up token you were using LPX and you hit $1, right, and then the market turned, and you had a 5% no trade zone, you won't start buying until you're at 95 cents.
Okay, but what I'm saying is, what if it takes a week to get from $1 to
It takes a
95
week.
cents?
It takes a week.
Pardon?
It does nothing because it removes emotions from trading, right? So you're
Well, what I'm
removing
saying is, like, over
emotions.
the
It's just
week,
using
doesn't
math.
that fair price change? Like, a week
No,
later, the fair price is the 95 because that's what now it's been holding for 24 hours, or
Well,
maybe it
here's
holds
the
it for a
thing.
whole week.
Yes, it will adjust. So what happens is you got this. I like the Haunted has drawn a picture of this road, right? Like the middle of a road, and the fair price is in the middle of the road. It's where the line in the middle of the road is. And if you go to the top, it's almost like a Bollinger Band picture in my head. So if the price kind of rises up there, it'll sell at the top of the Bollinger Band. If the price starts to drop down, it'll buy at the bottom of the Bollinger Band. But you've seen Bollinger Bands; they move with the fair market price. So that's kind of how this no trade zone works. So if you've stacked a bunch of die like we have with our up and up X pairs, and let's say we got, $10,000 worth of die waiting to go back in the market to buy our tokens back. So as it drops that little bit, it'll buy back. And then if it drops a little bit more, it buys more back. And it keeps buying back, and it will exhaust all of that die. So you were talking about 1% move down, 1% move down, 1%. It will keep buying your tokens back with all of the stacked die that we have. And what it's doing is it's trying to protect that floor price. And at some point, market will turn around a little bit, maybe, and maybe it goes back up to the top of the Bollinger Band. And at that point, it'll sell a little bit of your token and reaccumulate some die, waiting for that dip again so that it could go back in and recover your tokens for you. So this Bollinger Band road kind of visualization that I have is what allows me to picture this market maker constantly going in and out of the market with my funds, and it's trying the entire time of sell at the top of that band and reaccumulate at the bottom of the band. That way I always end up with more tokens than I started with. And that's where this impermanent gain kind of idea comes from, where we don't have the impermanent loss. Because my tokens, I will never have a cascading sale with an LPX, because the Bollinger Band's never going to say, okay, sell here, price drops, sell again. No, price drops, sell again. No, when the price starts dropping, that's when it activates the secondary token and it starts buying. So it's different than some trading bots we've seen out there, because trading bots will have cascading sales. They'll sell your token A, sell, and the next thing you know, you're screwed because you got nothing but token B, and you really didn't want that. You're basing it based on volatility, and so this system is designed where you will never have cascading sales, so you don't run out of this token that you love. It cannot happen. So as soon as you make a sell at the top of the Bollinger Band, the only way you can make another sell of your token is if that Bollinger Band rolls higher and you hit the top again, then you'll sell again.
Okay, so this is a better way to lay it down. So this is where you guys said you had a pretty low percentage set as a default. What was it, 0.5%?
We have one pair. Most of them are 5% no trade zone. We have our up token pairs at 10% no trade zone, and we did the difference there not because we have a favorite over one or the other. We were trying to gather data for two different systems.
Well, yeah,
It
this is
can go
where I'm
as
interested
low
because,
as
like,
0.3. It can
with
go as low as 0.3. No
Yeah,
trade
imagine
zone.
it was stable to stable with a 0.3% trading zone, and you're just stacking stables as this thing goes, as the ratio moves between these two stables.
okay, well, this is defining it for me a little better, because this is what I was trying to understand. Because with Bollinger Bands, I've seen on the markets where, like, for days or even weeks, the Bollinger Bands, the price can stay right near the moving average and not go anywhere near the edges of the Bollinger Bands, which is where I'm talking about
We've seen
essentially,
that.
like, if you
We've
set
seen
your
that as
range
well.
too
Yep.
wide, you won't be triggering your buys and sells, because the market fair price will adjust before you're hitting the edge of your Bollinger Bands, theoretically.
Absolutely. But we know with crypto, unlike traditional markets, which stay pretty stagnant, they, like you were talking about, 20-day moving averages, and nothing happens for freaking weeks. And so with crypto, we have a lot more volatility. And so when you have a small LP pool, let's say your favorite token is token ABC, and the liquidity pool is actually pretty small for that token, you're going to have lots of volatility in there, and that's where LPX can really shine. When your LPX is, say 2 or 3 times larger than the actual liquidity pool size for your token that you're selecting, you can see very significant, like maybe 70% APRs or even higher.
Yeah,
Okay,
and
now
just want to add
another.
one thing. There's going
Okay.
to be something called a managed LPX pulse, where you can change that no trade zone from 5% to 2% if you think the market's going to go sideways. And that way you're
Beautiful.
trading in that zone, where you think the market's going to stay flat here. It's going to be like a buy zone on a chart, where you say, okay, well, I want to make sure that I still profit from this. I'm going to change my no trade zone to 3%. And then you think that, okay, we might have a breakout here. I'm going to actually change it to 7%. And then we break out, price goes up. And then it starts, you have to wait until the price goes up 7%, and then it starts selling again. So that you can change a no trade zone in managed pools. We're giving that we're going to give that option to people so they can have more flexibility. And there's going to be these locked pools where no one can change the no trade zone, so it stays at 5%. So that way, because some people don't know how to trade, or some people might guess, okay, I reckon I should change it to 3% right now, and then the market starts moving up. you've just missed out on those gains. You're selling at 3% pump rather than a 5% pump or a 7% pump, and you're losing that profit there. So, the managed pools should be managed by people who know what they're doing, and then people can join your managed pool as well. So if Top Gun sits there and creates his own managed LPX pools, where he can control the no trade zone and the fee structure. So that way, you could say, "Oh, I'm happy to pay a higher fee when the market pumps."
Gas fee. He's talking about gas fees.
Gas fees, yeah, the gas
Oh,
fees.
okay.
Yeah, sorry, the gas fee. Then I like what you're doing. I see what you're doing and go, okay, well, this guy's actually making a great yield. I want to join your pool. I can join your pool. And you, as a manager, you can also set your own fee where you can make a profit from all the trades, and it goes into a wallet where you got to pay the gas fees for every trade, and you can keep some for a profit for yourself for managing the pool. So it's allowing people who know what they're doing to come show that what they're doing is great, and then people will be joining your pool because you're making such a great yield, and then you'll be actually making money from this as well. So we're allowing people to use LPX, be a manager, and earn a yield doing so, and then other people can join your pools as well. So the only thing that you can control are two things: is the no trade zone and the gas fee to go up or down. But the fee that goes to yourself, that can't be changed once you set the pool.
Okay, this sounds good. Now, obviously, I think one of the final point questions is none of this comes completely from altruism, unfortunately. So, what's your end? Your take, the gravy?
Yep.
Is it like a 1%, 2%, 3%? Like, what's the fee structure for using the bot like?
The fee structure for using the bot is 10% of the no trade zone. So it all depends on the no trade zone, because obviously we can't say it's going to be 10% of every trade or 1% of every trade, because if you're sitting at 0.3, you want to be able to be profitable. So it's going to be a percentage of the no trade zone, and that fee is then going to go and buy and burn up and up X. That was one of the questions that was actually in the chat. Someone sent that question. So every trade, whether it was $100, $10, $50, $300, $1,000, we've actually seen trades up to $2,500. It's going to be 10% of the no trade zone. So if the no trade zone is sitting at 5%, that's a 1% fee on every trade. And that's actually lower than what we're charging. What because the LPX that we have running now, that's actually it's charging a lot higher. I think it's 1.25%, and we're still showing a great yield, and we're still showing that it's profitable to have that fee structure. And then that fee structure then goes and buys and burns up and up X. So if you can imagine, if there was 100 pools and each trade was doing a volume of 8%, 8,000 on average on all the pools, that's a lot of buy and burn for up and up X. That's where the gravy is for up and up X.
Okay, no, that actually sounds fair, because like the more you maximize that no buy zone, the more you're trying to maximize your profits, and you're just gonna that really makes sense. I like that scaling, like going to a 5%, you're taking 0.5% of all trades. All right.
Yep. Yeah.
That yeah
So
no.
six
Crap. I
grand.
had one more question and I lost it.
Yeah, just a numbers game. So 6 grand a trade. Your bot's going in and out, in and out, in and out, making money for yourself. And at that point right there, if it's a 5% no trade zone, you're looking at the cost to your LPX of about $30. So I mean, you've made a bunch of money going in and out, in and out, in and out, and the scrape is about $30 worth out of that 6 grand worth of buy and sell transactions. So not much.
Yes,
It's
sir.
not a heavy hit at all. And like Con said, we have one of our LPXs is running, and we actually are taking not a 0.5%. We're taking 2.5% out of every buy, because every time it buys up X, or every time it buys up, we're taking 2.5% of that purchase. So let's say it just bought 100 up tokens. Our LPX did. Well, we're going to take 2.5 of those up tokens and not put them back in the wallet. We just take them out and we burn them. So that's our internal, that's our OA with its treasury doing its thing. So even though we're burning our own tokens at such a high rate, at 2.5%, that LPX still has a no impermanent gain or no impermanent loss. It's still at a profit, a very nice profit.
Yes, sir.
All right, and then my last question is, all this data you're collecting, are you running this on testnet v4? Do you have your own private servers right now, or are you already beta testing on the chain?
We're on chain,
We're,
big,
we're on chain mainnet
making
testing
money.
with
Hey, that's what I said.
up and
Go look
UpX.
at our charts. Go look at our charts. You'll see we're running LPX because it's pushing our floor price higher and higher and higher. And they're public for you. You can go look at every transaction. We give you all the addresses, the smart contracts. You can look at all of the stuff we're running. You just got to go to plusx.app to see our ecosystem that we're building out. By the way, you're going to even love some of the additional things we're coming out with because we've already built a lot, and LPX is a huge innovation. This doesn't exist on any chain, by the way. I mean, you have whales out there that pay development teams to build themselves, AMM bots and ARB bots, but this is for the public. I mean, this is something we built, so it's somewhat altruistic. We want to see Pulsechain thrive, and the only way we're going to see Pulsechain thrive is if we can take those market inefficiencies and instead of giving them to the ARB people and the nefarious people out there that are coming into our chain and stealing all of our money and running off chain with it, if we take those ARB opportunities and give it to the people who love Pulsechain with their tokens, then that keeps the value in our chain and it pushes our floor prices higher because that non-cascading sell idea is that we're never going to have two sales in a row. So what happens is that you stack some die, and the next thing you know, that die is going back in the market and it's buying your token back up, and the price just starts ratcheting up on your floor of your token. So we are somewhat altruistic. We want to see Pulsechain survive, and then right after we finish this launch, we're going to come out with OwnX, where you can now start collateralizing real world assets on Pulsechain. And then we have LoanX coming out, and then we have even additional builds coming out with our dev team. And none of those have a a structure where we're trying to steal from the public and go off chain with any of this stuff. We want to see Pulsechain. We got a lot of capital on the line for our own token. Haunted's giving me no freaking up token. He's giving himself no up token. There are no founder supply of up token, and we're all building this thing so up token go up in price so we can borrow against it with our LoanX protocol we're coming out with. And so I mean, there's more coming, sir. You've been away for a while, hanging that sheetrock, but we've been building over here.
Oh, I'm loving it. You guys should be posting some of your links up in the crow's nest so I can be hopping around. I'm still like, life for me is always busy. I'm doing this while I'm doing laundry at the laundromat. So I'm gonna go back to quiet mode for now. But yeah, if you can post some of the links to your charts, contract addresses, and your white papers, this is sounding pretty awesome because you guys definitely did not have to be this altruistic. I didn't mean to throw any insult, but everybody, nothing's absolutely for free. But this is really awesome because you could have kept it to the KOLs. You could have kept the percentages way higher. You could have gone after big money. You could have definitely done a sacrifice for this and pulled money out of the community. You could have given yourself founder supplies. So that is a lot of altruistic moves. Time, dividends, the internet money wallet, that they built something really amazing. Obviously they make money. That's how they keep their protocol going and keep building. Everybody needs to eat. But I mean, they redistribute fairly. They ran a controlled sacrifice, so they had an actual cap on it at 1 million. So it's one of the only successful ones we had because they didn't go to 10 or 50 million. And you guys are just skipping that all together. And I constantly say KG is one of the best builders on the chain. So no, this is sounding like a very good protocol. I'm definitely going to want to play with it a little bit myself. Kind of see if I start seeing some dollar signs myself going, oh yeah, these numbers are working out incredibly well because I'm one of the few people that can provide V2, and I know exactly how many fees I've generated in my LP, and people are like, how do you do that? Well, simple math lesson. Multiply both sides of your LP when you first put it in. Find your K number. Then find the square root. If the token's equal, that's how many you'd have on both sides. Now you have all the information you need. Just do that periodically every month. And you'll see that square number you get out of the K keeps getting larger and larger. It gives you a better idea no matter how much they're skewed one way or another in impermanent loss. So like I love playing around with math, and if I see this LP is actually like, oh yeah, the chain's getting crapped on, we've gone down another 100% in price, but oh look, I have 10 times the amount of tokens I used to have. So yes, this thing is very, very profitable because I still think the chain will come back one day. So yeah, I
Hey,
want to see
take a
all the
look at
links I can,
Validator
play
X.
around with it. This is
Yeah,
awesome.
take a look at Validator X. It's one of the protocols we launched a couple months ago, and the yield, because you know how Validator yield works, and the one I have in my room is making about 10%. Our validators, we have a pool of well over 900 validators with a pooled, liquid staking token now, Validator X. Our yield is somewhere around 26% since we launched in January 27th. That's our APR, and we don't take a bunch out. Here's the key: the altruistic part of all of the yield that comes into the validator pool are to pay for the electricity and the server costs and everything else. 9% of the yield. The rest of the yield goes back in, and we're compounding those validators. We're making a new validator for our community about every other day. And so all of that yield is coming in and compounding. And so the validator yield that we're getting, because we're building so many blocks now, and the priority fees over the richer shit that's gone on the last couple of weeks. Some of those weeks were amazing weeks. Like a 44% APR for that week on the validator, because we're pooled. So we got products out there that are trying to help Pulsechain get better. We need guys like you waking up to the fact that we're building our ass off over here and doing good for the community.
So basically, you set up ETH staking. You set up Pulse validator staking pools in an essence. That's really cool. I kind of want to validate, but I don't have the time to set up a computer. But generally, the validator APR is 9 or 10%.
Yep, we're at
So
25.
how are you guys
Compounding,
compounding?
brother.
Well, I guess the
Compounding.
compounding, right?
Math. It's math.
Compounding,
Yeah.
and the bigger we are, the more blocks we build because we've got a bigger
Yep.
chance of building a block.
So how does the validator one work? I submit my pulse into the pool and I get some sort of reference token,
Yep.
and then I submit the reference token back to get my share back, but my share will
Yep.
be larger when I submit the token back.
You got 100%. And in the meantime, you can take that receipt token, and Crispy man, you know him. He's over there providing LP with it with Pulse, because it's they're linked together, because the ratios keep going up together, because it's 1-for-1 when you kind of start the process. You put in a million. Put in a million Pulse when we first started this thing. You got a million receipt tokens, and then as your receipt token starts going up in value because of the compounding the yield, you pair it up with Pulse. There's basically zero in permanent loss, and plus you're getting gas fees on that. I mean, transaction fees from V2 liquidity. So he's getting yield on top of yield.
And soon you'll be able to use your UPLS in LPX.
LPX, and that's a game changer. So now you're getting 20%, 30% yield over on Validator X, and you're stacking another. You got this receipt token that's stacking another, 10, 20% yield on top of that. It gets your Pulse working really well for you.
Okay, so all right, now this is where it's got me a little interesting. Maybe I'm thinking the math wrong. So I get 1-for-1 token if I submit my pulse, but then it's time bound to those tokens. Like if I wait a day, I'm not going to get a much extra pulse back, but if I wait a year, I'm going to get a whole bunch back. But now let's say instead of submitting pulse into this, I go buy these off the open market, since they are trading in liquidity. I can take the ones I bought and redeem them, but how do I know how is it how from the time I start holding these tokens, my share would start increasing? If I bought these
1.043
tokens off the
yesterday.
open market and traded them right away, would I just get 1-for-1 from my pulse?
Yeah. Right now they're trading. Right now the value, if you redeemed one, your receipt token is worth 1.043. So in the 2 months we've been running, you've already increased your bag 4.3%. That was yesterday. I did the math on it. I didn't look at the UI today to see what because we get yield every 8 hours from the launchpad from Pulsechain. They distribute the yield from your validators every 8 hours, and so that receipt token goes up in value every 8 hours.
Okay, but
So
so if I buy them off the open market, it's worth 1-for-1 for the first 8 hours. After the eight
Yes,
hours, it'll
exactly.
start going up.
Yeah, right now, if you go on the open market, they better be selling for more than 1.043. If not, you got an ARB opportunity. Buy them cheaper on the open market, take them back to the UI and redeem them. And
wow.
there's no onboard and offboard. There's no fee coming in, no fee coming out. There's no lockup period. It's just It's just awesome.
You gotta understand how awesome it is, mate. It's just stick
Oh,
your
wait.
pulse
I
in there
understand. Sorry. So,
and
yeah,
earn more
sorry. So
pulse.
it's not directly 1-to-1 for the pulse. Like the actual, your token, the ratio has gone up because of the ARB opportunity. So one of your placeholder tokens is worth 1.04 pulse tokens right now.
Yes, sir.
Okay.
Like it, I started on day one. I put in one pulse, so I put one pulse in. Now I can redeem 1.04 pulse for every pulse I put in there. And we started on January the 27th.
Okay, so if I submitted 32 million pulse right now, I'd only get 31 point something million of your placeholder
Yes,
tokens
correct.
because they are worth
Yep.
more.
Yep.
Okay.
But
I
then
thought
back
I'd get 1-to-1 the moment I made a vault, so that's where I was getting a little confused. Like, what
no,
kind of
no,
ARB
no.
situation you setting up here? Like, okay, no, this is better.
Yep. So that way no one can game the system and extract and whatnot. So you can also, like in the beginning when you first start, it does take 2 days until you can claim your UPLS, just so that way no one can game the system, put in some pulse. The rate goes up, and then then they sell, right? And then it just goes to they're sort of stealing value from the ecosystem. So you're locked in there for 2 days, and then you can just withdraw your UPLS. It'll be in your wallet, or you can leave it in there. It's up to you. But the rate just goes up
Okay.
slowly over time, and then you come back, use that that UPLS that you had, come back and just have more pulse in your wallet. It's like magic, mate. You're minting pulse out of thin air, and it's coming into your wallet, or in a form of a rate of UPLS.
And hey, here's the bonus on this. We've now instituted a VX strategy. So if you want to take some of that yield that you're getting from your 32 million pulse you put in, or let's not act like you have that. Let's say you put 10 million pulse in, and you're getting a yield every 8 hours, and you're watching your U pulse go up in rate. And it's like, hey, you know what? I'd love to take like 50% of my yield that I'm getting off this and have it go buy token ABC. We got that fully automated within the system where you can scrape off part of your yield and allocate it to your token ABC, and that ends up in your wallet.
Sorry, can you repeat that last part again?
Yeah. So I'm going to use Crispy Man as our example. So Crispy Man he put a bunch of validator pulse in there, and he wants about 30% of his yield to go buy the fire token. So it's fully automated. When we get a yield allocation, as soon as it hits certain parameters, like hey, I've made enough yield. Let's say I've made a couple $100,000 pulse in yield. Take 30% of that, go buy my fire token, and put it in my wallet. Fully automated. There's no cost, no fee for that. It just does it for you. You just have to set it up.
So I think I'm a little more confused again because, like, I thought essentially the way I'm harvesting my yield is by the fact of the appreciation of the placeholder token.
Yes. So what happens is if
Okay.
you want, so let's say he all of a sudden his placeholder token is now worth 1.05. So now that it's gone up, and he had enough yield. He has enough of those tokens where it's like the system will say, okay, you know what, your yield's in there. We can go sell. We can go take, and you have to deposit some of your UPLS in this smart contract. We can take a couple thousand of those UPLS now because they've made, and we'll trade them for the fire token and send the fire token to your wallet. So Crispy actually has fewer UPLS tokens, but his total amount, if he were to redeem all of the ones he has left, are worth more pulse than he started with. It extracts some. It does the math for you, and it says, okay, you started out with 10 million, and let's say you have 10 million UPLS. Well, those 10 million UPLS are now worth, an additional 43,000 pulse. You got an additional 43,000 pulse now because they've gone up in value 1.04. So okay,
Well, here,
so
let's make the math easier for you. You guys said your
okay,
APR is about 26%. So if we
yeah,
ran it
for a
off and
year.
call it 25%, so
Okay,
hypothetically, I put my pulse in, I wait a whole year. So I've got
okay,
25% of yield.
yep.
Now, and I'm at 125% of what I had. If I take 20% of my up LP tokens, is it? Or up LS? Sorry,
It
a
you
lot of
you
acronyms being thrown at
no,
me, but
it's
I take
just no.
20% of those, sell
Yep,
them. I originally basically have only sold off my yield.
correct. And you can turn it into what, or let's say you only take 10% of them, and so that you keep some of your pulse. You still want to stack pulse, so you keep 10, but 10% of them can be swapped automatically throughout the months into whatever token you want it to be.
Now that's if I deposit these into your other system for
Yeah,
the art
yeah,
bot or trading bot.
correct.
It's more of a trading bot than an art bot, but a
Yeah,
little bit of both.
it's just a swap
Our
bot. It just
bots just
swaps them.
they use flash loans. You don't really have to deposit in those as long as you got the gas. So like that's where I'm like more of a trading bot, but still, no, all right, this is
They
cool. This
swap.
is cool.
Yeah, fully automated swapping mechanism if you want to, and utilize that.
All right. It's been about an hour. I want to make sure that this recording is short enough for other people to listen to, and make sure it's still short stream for people to listen. So I'm gonna cut it short here, and try to do another one tomorrow or the day after, because LPX is coming soon. So we're gonna have more of these. So stay tuned. We're gonna have more streams or more spaces throughout the week, just to explain LPX better and better, and that way I can also explain LPX better and better. So don't be shy to ask questions in our Telegram, in the Up and Up X Telegram. You can always go and look at the go to plusx.app, look at everything that we have and what's coming. Look at Validator X, the vx.plusx.app. And go look at the numbers and sit there and determine if you want to put your pulse in there. People who have put their pulse in Validator X are happy. They're happy with their returns. Everything is running smoothly, and hopefully LPX within a week. Let's go, baby. Everything's in the messages. Dave just put a link to our Telegram. I have a link to the PlusX website. Please, guys, go have a look. Don't be shy, and hopefully we'll have a bit more questions next time we're in here. So that way everyone has an understanding of what's happening and what's going on. Anything else, Dave?
Yes.
Or Top Gun?
No, hey, we're a fully transparent ecosystem. Up and Up X are amazing. Our Telegram room, go over there, look at all the bots that Boss has been building for us. We are trying to do the best we can for Pulsechain. Come visit us in our Telegram room.
Yes, sir. All right, I'll end it here. Anything else, Top Gun?
No, this sounds awesome. You got me excited. I'm going to be looking into it. Thanks for having me up.
Yes, sir. No problems. Hopefully we get you up next time with more questions, and we'll try to break it so that way you understand it even more, and then you'll be like, yes, I want to be part of this, and I want to be a manager myself and start making people jump in while you manage the pools. Let's go, baby. Thank you, everyone.
New buy and burn from down here, I'm looking at this guy. The new buy and burn from the loan staking pool yield, this could be massive. We don't know what Liquid Loans is going to do, but many project a lot of loans, and every loan pays a fee, and those fees go to the stakers of the loan token, and we plan to have a big portion of that. Also, a major benefit of token price protocol, the reserve pool, so that this action happens. Price drops, boom, we activate some buy and burn. So there's just all this continuous buy and burn. That's what we're looking for. So we keep talking about this buy and burn, but where's the math? We want to see what the price is going to do. Well, that's going to come to you here in the next video. When you see the next video, this will be my page one. Page one will be this guy right here. And when you see that, that's the math video. That'll have all the spreadsheets, and I'll show you what my projections are for the buy and burn. Until then, enjoy the little history lesson, the memory lane here, down memory lane. You guys all have a beautiful day.